Hey Internet, I've got a big smile on my face today because the first day of trading for all these Bitcoin ETFs just ended. It looks like we were close to 5 billion in volume, breaking all ETF records, of course, closer to 2.5 billion if you exclude GBTC, but either way, it was really quite the momentous day for Bitcoin and I think a new era in finance in general. It's just so exciting to finally get this stamp of approval. And I want to make a video addressing a question that I've been getting a lot from my friends and family. I've been doing a lot of these Twitter spaces, X spaces, hearing this question tossed around a lot. And the question is, are these ETFs priced in or are they not? And the short answer, spoiler alert, is no. Absolutely not. These ETFs are not priced in, and I just want to address that here. A little bit of a stream of consciousness, so hopefully it's organized enough to follow. But I think the impact of these ETFs is being severely underestimated. Severely underestimated. I don't need to beat a drum that's already been beat, ever since the first day that we found out that BlackRock was applying for a Bitcoin ETF. What was it, 6 to 8 months ago? But just what this does for access to Bitcoin as an asset class for all of these financial institutions, money managers, hedge funds, 401ks, high net worth individuals. It just opens up the access, more open than it's ever been before. Because previously, if you wanted to buy Bitcoin, you had to get your own wallet or sign up through Coinbase and KYC. And a lot of people are scared with knowing about Mt. Gox and FTX. And there's just been a big hurdle to get into Bitcoin. And now the only hurdle is having a brokerage account. Really, if you have a brokerage account at Fidelity or Robinhood or wherever you have one, you can now buy Bitcoin just with a few clicks. Just, hey, there's people across the world right now that are calling their financial advisors saying, hey, what's this Bitcoin thing? How can I buy it? All right, cool. Allocate 1%, allocate 2%, and slowly it'll be, 5 and 10% as it grows in value. But this is just huge. And anyone who says that the validation doesn't matter, Bitcoin doesn't need Wall Street, just, I really don't think they understand the whole plot. I, the validation matters because and especially from BlackRock, there's nobody bigger than BlackRock. It's BlackRock. I mean, they're the largest. They have more assets under management than any other firm in the world. They're essentially a fourth branch of the US government. And this, for a lot of the parents and the grandparents out there, this makes it okay for them to buy Bitcoin. And I have a personal anecdote. I've been buying Bitcoin since 2017, and I've been trying to orange pill my dad ever since. What is it, 6, 7 years now? And I actually just now orange pilled him in January of 2024, and it was because of all of this going on. He's just now buying his first Bitcoin because he's constantly seeing it on CNBC. He's hearing about it from his brokerage account. He's seeing it everywhere, and this was the validation that Bitcoin needed. If we want Bitcoin to eventually become a unit of account and a global store of value, these are the things that we need to happen. And I think now is actually the least risky time that there has ever been to buy Bitcoin, because long before I got into it, buying Bitcoin in 2011, 2012, 2013 was, there was no one on Wall Street. People within Wall Street were talking about Bitcoin, but there was no one legitimately talking about investing in it as an asset class for, and I'm talking like the boomers here. I'm not talking, the 20-year-old analyst at Goldman. I'm talking about the guy who has been buying real estate and indexes and ETFs for 40 years and runs a balanced portfolio. Like the idea of adding Bitcoin to that was not something that was, ever around back then. And even in 2017, it was like, is Bitcoin going to be co-opted by a nation state? Are they going to figure out a way to shut it down? And obviously, we're 15 years strong now, and this really feels like a turning point for Bitcoin. I think it's um, the most asymmetrical bet there has ever been in history. Even now, I think, like I said, even more so than it was in 2011 when it was just a few dollars or a few cents. Like this is the validation that Bitcoin needed. And if you look at it, all these ETFs, they're already racing to the bottom on fees. I and a lot of other people thought that maybe this would happen the next cycle, but it's happening this cycle because it's it's a winner take all environment. They want to be the asset manager with the most assets under management for the Bitcoin ETF. And with these fees dropping so quickly, it's actually cheaper to buy Bitcoin via an ETF than it is to buy Bitcoin on Coinbase or Strike right now, which is kind of insane. And it's um, another thing that we have to think about is the unit bias of this. Right now, a lot of people see Bitcoin and they see a $46,000 price tag, and they go, "Oh, I could never get into that. That's way out of my league." It's kind of like the Berkshire Hathaway stock being hundreds of thousands of dollars. People see that, or the unsophisticated investor, someone who didn't get a degree in finance, sees that and goes, "Oh God, I can't touch that," right? So what's happening with these ETFs is they're trading for $30, $40, $50. And they're going to be able to utilize stock splits. And if you're not familiar, stock splits are commonly used on Wall Street as basically a way to help psyop retail investors into buying shares of a stock of a company when the price has gotten too high. So if Apple stock is $200 and there's 1 billion shares outstanding, I'm just making these numbers up, what they'll do is they'll say, hey, the share price is now $25 and there's 4 billion shares outstanding. So these ETFs are going to be able to take advantage of these traditional, marketing methods and just tactics that has been used on Wall Street for decades. And not to mention the fact that the marketing orchestra that is already playing their first song, we're already seeing the most interesting man in the world. I was at the gym this morning and I just saw, I think it was just grayscale commercials on repeat. We're just now getting into this marketing orchestra. And I talked about this in my last video. I think we're going to see Bitcoin transform into an ESG friendly asset. People, the FOMO is going to start rising, I guess, for better or for worse. And the other thing is, Bitcoin is going to outperform everything the same way that it has over the last 10 years. This idea of diminishing returns, a lot of people are saying, oh, this next cycle of Bitcoin, we're going to see diminishing returns because we're growing adoption, blah, blah, blah. In my opinion, it's bullshit because we're at less than 5% global adoption. So how could we start seeing diminishing returns? So what's going to happen is Bitcoin is going to continue to outperform everything else, at least 3 out of every 4 years. Maybe there's one down year and 1 or 2 down years in the 4-year cycle. And people are going to want to get into that. And all these ETF providers, their fees that they're making are going to compound as Bitcoin continues to go up in price. And the executives and the management at all of these ETF providers are going to say, hey, why don't we double down on this Bitcoin stuff? Why don't we tell all of our clients to buy more Bitcoin? Because we are making so much money on the fees, which is going up in value because we're holding it in Bitcoin. And it's just this flywheel that is really going to, I think, blow a lot of people's minds in 2024 and 2025. This is not going to happen overnight. It's not like we're not going to shoot to 200,000 Bitcoin tomorrow because of the ETF. This is going to take time, right? Like, this is something that is going to require boards of directors to vote on. If a company is potentially talking about a Bitcoin strategy for their balance sheet, the board is going to have to vote on that. If a company is thinking about letting their employees buy a Bitcoin ETF in their 401k, this is going to have to be approved. And a lot of people are going to have to slowly come around as they see everything that I'm talking about today. So this is not going to happen overnight, but like I said, it's still, in my opinion, the most asymmetric risk asset that humanity has ever seen. Meaning that the downside is Bitcoin goes to zero. It goes from 45K to zero. And the upside is it goes from 45K to millions, tens of millions, depending on how well you understand Bitcoin and its finality of scarcity. So, and I haven't even mentioned the myriad of other factors at play here, like the halving and the rate cuts and the elections and the people that are running for election in the US constantly talking about Bitcoin and just the modernization of the world. And I mean, there's the fact that it's a better form of storing value and transferring value and all of that. I'm not even mentioning any of that in this video. I'm just addressing all of these like sort of direct, is the ETF priced in factors. And I think the biggest, let's say, problem that Bitcoiners have with the ETFs is these ETFs are obviously not in self-custody. So it's not the real Bitcoin. But it is important to note that these ETFs are cash create ETFs, meaning that they have to go out on the market and acquire the Bitcoin that they were paid to acquire. So it's not like there's going to be this massive rehypothecation of Bitcoin and, you know, fractional reserve lending and all this, you know, fancy finance stuff that's happening with these ETFs. It's money goes into the ETF provider buys Bitcoin, and the price of that ETF or of those ETF shares go up in value. And I think this is sort of a gateway drug for Bitcoin for a lot of people. I think a lot of people at first will, like I said earlier, they'll call their financial advisors. They'll say, hey, what's this Bitcoin thing? 1%, 2%, you know, it's the same login on Fidelity that they've had for a decade. And that's an easy pill to swallow. But eventually, once people really learn about this asset, they learn about the power of it, they, in my opinion, will start to go into self-custody if they'd like. But if they don't, it's not the end of the world. I don't think all Bitcoin, all 21 million Bitcoin, need to be in self-custody for, you know, this experiment of Bitcoin to work. But I think it helps. And anyways, I think it's a gateway drug to self-custody, and I'm just super, obviously I'm bullish. I think a lot of people are underestimating what these ETFs mean for Bitcoin. There's so many things going through my head that I didn't even say in this video, but I'm going to make a lot more videos. Let me know if you thought this was helpful. Please follow, like, subscribe, wherever you're watching this. Do all of the things. Still getting used to saying that, but I will get better. Anyways, see you on the next one.